Ladies and gentlemen, good day and welcome to the Q1 FY2024 results conference call of Meghmani Finechem, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Meet Vora from Emkay Global Financial Services. Thank you, and over to you, sir. Mr. Vora, your line is on the talk mode. Please go ahead. Mr. Meet Vora, we are unable to hear you. Mr. Meet Vora. Ladies and gentlemen, we seem to have lost the audio from the line of Mr. Vora. Please stay connected while we try to regain the audio. Ladies and gentlemen, thank you for patiently holding. We now have the line for Mr. Vora reconnected. Over to you, sir.
Good evening, everyone. I would like to welcome the management and thank them for this opportunity. So we have with us today Mr. Maulik Patel, Chairman and Managing Director, Mr. Kaushal Soparkar, Managing Director, Mr. Sanjay Jain, Chief Financial Officer, and Mr. Milind Kotecha, Head Investor Relations. I shall now hand over the call to the management for their opening remarks. Thank you, and over to you, sir.
Thank you, Miss. Good afternoon, everyone, and welcome to the call to discuss MFL's Q1 FY24 performance. I believe you had an opportunity to view the earnings presentation that was released on Saturday. First of all, I would like to talk about the renaming activity that we have undertaken. The Board of Directors had proposed to rename the company to Epigrel. The proposal is approved by shareholders and also got approved by Ministry of Corporate Affairs. This renaming is undertaken to strengthen our corporate brand in line with our commitment to transform the company as a global multi-product chemical conglomerate and enhance our reputation as an integral partner for esteemed clients and our stakeholders. Now, let me give you update on the business. FY23-24 started with a quarter that witnessed events like global level slowdown and destocking, impacting the chemical industry both at demand level and also at the realization level. We too witnessed a quarter with drop in revenue, majorly on account of drop in realizations and slowdown in demand. However, we achieved volume growth of 11% year-on-year in Q1 FY24, and this volume growth is in line with our expansion plans, resulting in volume coming from CPVC, epichlorohydrin, and hydrogen peroxide. And our diversification and the continuous capex that we did in previous years have played a big role in having lesser impact compared to if we would have not diversified. This resulted in revenue contribution from derivatives and specialty chemicals at 38% compared to 21% from similar period last year. We estimate this volume growth story will continue further as these new projects will further contribute in FY23. Also, the current slowdown scenario, we believe, is short-term phenomena and situation should improve by Q3 onwards. Considering our long-term vision, we are on schedule for our expansions of CPVC of 45,000 tons per annum and chlorotoluene value chain, and this will drive volume growth in FY25. Our R&D center is also almost ready. Hence, we are ready with another strong pillar for our future growth in the specialty chemical segment. We also have commissioned 18.34 megawatt hybrid power plant in Q1 FY24, a step towards the green energy, and this will also add to savings and P&L to the extent of price difference with grid. We believe that the current scenario is a phase that will pass and the long-term story remains intact. Hence, we are preparing ourselves for long-term growth and we are moving in that direction. We are focused to do continuous expansion in high-value and high-growth products, strengthening our integrated complex and catering to the diversified industry to bring...
आपण ज्या व्यक्तीशी बोलत आहात त्यांनी आपला कॉल होल्डवर ठेव.
To bring consistent growth in the business. I now hand over to the call to Mr. Sanjay Jain, our CFO, who will take us through the financials.
Thank you, Maulik. Let me take you through the financial performance of the company. Q1 FY24 revenue was down by 15% year-on-year comparison. This is mainly on account of realization which were down by around 26%. However, the volume has gone up by 11% with commissioning of the new capacity of CPC and epiclohydrin. With overall slowdown, drop in realization and consumption of high-cost inventory, the EBITDA and PAT degrew on year-on-year basis. The raw material prices which have softened but not as substantial as decrease in realization, thus impacting the profitability margin of the company. Our trailing 12 months as on 30 June 2023, the return of capital employed is 25% and return of equity is 29%. The net debt to EBITDA has stood at 1.5x in Q1 FY24 versus 1.3 in Q4 FY23. This is on account of drop in absolute EBITDA. Net debt as on 30th June 2023 is rupees 902 crore as compared to rupees 863 crore as on 31st March 2023. Net debt to equity of the company remain at 0.8x in Q1 FY24. In Q1 FY24, we spent rupees 108 crore on our capex plan. With this, we can open the floor for Q&A.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Hardik Gori from Alpha Plus Capital. Please go ahead.
Thank you for the opportunity. There is another competitor who is planning to put up ECH capacity of similar size by Q3. So would this not create demand-supply mismatch, at least in the short run?
Hardik, yes, another competitor is coming. So like we have started last financial year, the same time, to create an infrastructure to get approval from the customers. It is also a time-taking process. And I think by the time, we have also created infrastructure in Europe and US also. And I think it took long time us to create this infrastructure. And now I think it is established and we have sailed our first vessel in last quarter, and in the current quarter also we have sailed our first vessel to US. Same time, just to give you the supply demand situation in India, all the people who are coming in India right now who are manufacturing epoxy resin, they are also on expansion mode. So in the second half of this financial year, I think the major capacity addition of epoxy resin is going to be happen in India. And next 2 years, we are expecting almost epoxy resin capacity will be almost double than what we have today. So definitely in the short term, this will be the excess capacity. It's for the short term, but I think next 2 years, I think everything will be stabilized and it will be absorbed looking at the current infrastructure growth in India and the expansion growth of epoxy resin manufacturers in India.
Understood. Thank you for taking my question. That's all from my side.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star in 1. The next question is from the line of Bobby Jay from Falcon Investments. Please go ahead.
You mentioned in your presentation that you had high-cost inventory.
Sorry to interrupt, sir. We are unable to hear you clearly.
Hello? Is that better?
Sir, your audio is sounding very soft.
Hello?
Yes, sir. Please proceed.
You hear me now? Yeah. Okay. You mentioned in your presentation that you had high-cost inventories amidst falling prices. So could you mention what inventories we're talking about? Because for caustic soda, you only need salt water.
So, yes, so this is including our majority raw material. If you see all raw materials price has gone down in last quarter. So this is including the last 6 months, I would say, including the glycerin high price for the epichlorohydrin, including PVC for the CPVC manufacturing, and the coal, energy, which was a little lag behind the chemical prices, which was started going down just recently. So that all three are a major impact for the inventory. Yeah.
Could you talk a bit about what your utilization is for caustic, how many tons you have sold, and what's the ECU currently?
Volume caustic soda.
So volume of, we have run the plant of caustic soda on a capacity utilization of around 70-75%, and that is the case. And in terms of like other products also, overall the plant has run it around 70% capacity utilization. Realization. And in terms of realizations, if we look about, then the caustic soda realizations have dropped around 40% compared to what it was last quarter, the quarter last year. And in a similar range, if we talk about the overall drop in terms of the YOY, the revenue has dropped by 15%, but the realization all put together has fallen in the range of around 26%.
Right. So what is it in rupee terms?
Sorry? Rupee terms.
What is it in rupee terms? How many rupees per ton?
The caustic soda realization, the ECU that we say is around 30,500.
Right, but if you look at this realization over the broader sweep of the past decade or so, it's actually in line, right?
Yes.
It's not that low.
Yes. If you last couple of years is exceptional, yeah. Otherwise, it's in line, except the energy cost.
Right. So assuming you don't see any better caustic soda prices, how is your whole, how does the economics work? Your profitability and everything.
So normally we have seen the caustic soda prices is in line with the energy prices. So if you see this time it is little lagging behind, and energy prices has gone down recently in last 1 month, 1.5 months, compared to normally it is in line with the caustic soda price. Because there is a delink with the caustic soda price and the energy prices right now in the world. Yeah, but eventually we think that it is normally in line with the energy cost.
Right, but what if it doesn't? History doesn't always repeat. What if this is the EBITDA per ton that you have? How does that influence all your profitability guidance that you've been giving?
Normally it is in line with them, because most of the people, the energy cost in India or in Asia Pacific, it is the same almost. So there is not much difference. So normally the caustic soda price is driven by in Asia at least, it is driven by the energy price.
So what is the difference in EBITDA per ton today versus normal times? Your margins in whatever way you express it.
The last quarter, I would say it is exceptional because the energy price has not fallen because of the high cost of inventory also, and the caustic price has fallen much faster. But normally it is in line normally. But EBITDA, I would say normally we are expecting almost 25% EBITDA from the caustic soda business.
You see, energy prices before were only dependent on renewable sources, right, like coal and oil. But in the future, it's going to be more and more non-renewable. So you cannot expect the same correlation.
So, the energy requirement right now, which is having, it is very difficult to switch over 100% on the green, because these are the continuous plant, which is not possible because the green completely and renewable completely depends on the policy of the country, policy of the state. So it is not normally 100% you can depend on the green energy for the continuous plant.
Yeah, but in Europe, that's the direction that they're going in. So over the next 5 years, it's going to be more and more green, which means you might end up with high coal prices but low green resources, if you understand what I'm saying. So your margins might not be what they were historically.
Yeah, but now onwards, I think in the future, people will invest, at least normally I would say, at least you can invest up to 30 to 40% of your requirement by green energy, not more than that. None of the industry can afford 100% on the green base possible product. No, it is not possible in the chemical industry at least.
Right. So over the next 2-3 years, what is the split between profitability terms? How much do you expect caustic to contribute? After all, it has the biggest market, right? Your other markets are too small for you to give scale.
Yeah, India is the biggest market and it is continuously growing also, unless the last quarter is a different situation because major export business like textile, like agrochemicals, like pharmaceutical, everything is down because destocking is happening in Europe and US. That is the major reason. And because of that, our customers, all who are exporting, they are hampered in their efficiencies, their manufacturing plant running very low capacity. So that was the case we have seen. I think that is, since we started, I think this is the first time we have seen. But we feel that the destocking this problem will soon get over and started again from, we see some positive sign also. And the second thing, in terms of the chemical cost, in terms of the raw material cost also bottoms out and it started going up from last 1 month. So we see some positive sign in terms of the caustic soda demand. If you say, yeah, everybody has expanded in India. So normally this was happened in 2010 also. It was happened in 2014 also. Now again in 2023. So eventually, normally the people expand at, a couple of plants are coming at the same time. So this scenario was created in India, but ultimately over a period of time it is absorbed in India. Sometimes it takes 6 months, sometimes it takes 9 months because the Indian economy is growing, unlike other countries.
Are there any imports of caustic into India?
So India is a net exporter of the caustic soda as of now.
Yeah.
So no imports?
Very less, maybe from the eastern side, but not on the western side, yeah. Eastern side, the requirement is huge in terms of the alumina. A lot of people are selling from west to east also, but still, India is the net importer. And I think the alumina capacity is also, everybody is expanding in India. So we see that the caustic demand will go up if you see now 2 to 3 years down the line.
You mean net exporter, right? Not net importer.
Yes, net exporter.
Yeah, India, normally caustic soda flakes, India export to African countries. And lye also, in the western side, people are exporting also some volume, but not major, yeah.
And is ECH coming from Thailand or is it mostly domestic now?
ECH, yeah, it is coming from Thailand right now. Thailand is a major supplier, but also we also started supplying to the local manufacturer, and gradually our market share is also growing. And same time, I think we have been talking about the European first vessel. We have already started selling in Europe. And US, our first vessel has reached in this month, and we are going to start selling from this month onwards.
Right. But why are imports from Thailand still coming? Are you not price competitive with the ECH from Thailand?
See, ECH, why you are saying why they are importing from Thailand? Yeah.
Right.
They have been long-term relation with that supplier, so it is very difficult to crack over a period of time to switch over entire volume. We believe that. So gradually, definitely, Indian capacity is also expanding. The people are expanding their capacity, so they need a local support to run their plant efficiently. So we believe that eventually our market share, as the capacity and the demand is growing in India, our share will increase much faster.
However, on a quarter-on-quarter basis, we have seen the volume increase in the domestic level and the export level also. So that is increasing on a continuous basis, but the pace is not that what we had expected. But we believe that as things improve from Q3, that pace will further expand, and I guess by Q3 we will reach the optimum kind of a thing.
Yeah, so that you are right. The market is in the export also. It is little lower side. That's why our approval takes little longer time right now, because people are not in need right now. But our share is increasing, our spread is increasing, our customer base is increasing right now. So I think normally we will get advantage once the cycle will revive in the export market, and the domestic demand will go up as the expansion of epoxy manufacturing is going on right now in India.
Okay, thank you.
Thank you.
Thank you. The next question is from the line of Anirudh Shetty from Solidarity Investment Managers. Please go ahead.
Hi, thanks for the opportunity. I had a few questions. You had mentioned that the net debt is about 900 crores. Does this include the preference shares that are outstanding on our balance sheet?
Yes.
It includes that? Okay.
Yeah.
And, we are in a period where, our absolute EBITDA is actually declining, and, we have debt on our balance sheet. So, it would be good to know, about our, what is our sense of what absolute EBITDA we could do in 2024, and just get comfort that the net debt to EBITDA for the year does not, go to a very, very high level. So can you just share your views on where do you see net debt to EBITDA, kind of shaping up for our 2024 year?
Yeah, Anirudh. Yeah, the first question about the preferential of Meghmani Finechem Ltd, that is there. That is there in the total debt of 900 crores. With regard to the absolute EBITDA for the year, for the FY24, this may be in the range of 450 to 500 crores. And we are looking, the way we are going expansion, we are looking that our debt to EBITDA may remain in the range of 2 to 2.25.
Less than 2. Yeah.
Less than 2.
Got it. And we are aspiring to get to 5,000 crores by 2027, and we want to increase our share of the downstream, but caustic soda also will remain a meaningful share of our revenues then. So, given that this is such a volatile business, how does the realizations, the sales, bouncing up and down, how does one get comfort that we can actually get to this 5,000 crores then, because no one knows what the cycle could look like 3-4 years later. So how does one get confidence in achieving this target?
Yeah. So Anirudh, our first target is to the volume, which is in our hand. Based on the continuous expansion, what we are doing, continuous capex plan, what we have, continuous the new product addition, what we are doing it right now. So that we are very sure that we are going to achieve it. Yes, you are right that the time when we have finalized the 5,000 crore, it may be here or there. It may not be exact 5,000 crore. Sometimes it is down cycle, right? Current situation, it may be 4,500 or 4,600 crore kind of thing. But yeah, normally on a longer term point of view, we believe that we will achieve those numbers. Yeah, 5,000 crore based on our expansion plan and the capex plan.
Okay, and we are aspiring to also get to see a 28% EBITDA margin plus minus and 25% pre-tax ROCE. Now, when we look at the chemical players, 25% pre-tax, something that probably the best-in-class chemical companies who are doing something who have very strong chemistry skills or very strong integration are making this number. So, given that we are looking to do more and more downstream, but also we have other competitors who want to do those downstream products as well. What gives us the confidence that we can maintain this 25% ROCE? And if you could also give more color on, why these downstream products are, either technologically challenging or require, multi-step chemistry, or there's some edge here, that color would help us appreciate why it's a tough business to do.
Yeah. So, that's a good question. The chemical line is not that easy. Once you are setting up a plant, you need to stabilize it, you need to capture the market, you need to take approval of the customers. So anybody, if you start thinking today also, it will take 3 to 4 years time minimum to stabilize or to reach at optimum level of the chemical plant. So, and by the time we are in country like India where everything is growing, the demand is growing. So we believe that the demand always will be growing much faster than the manufacturing capacity which is coming in India. Definitely it happens sometimes, there is overlapping and there is overcapacity for short term of time. But eventually this capacity will absorb very easily in India, looking at the country which we are growing right now.
Right. And these products that we're looking, the downstream products that we're in, are they more technologically challenging products that we're doing, where requires R&D or chemistry, some specific know-how, or what is the edge in these products, if you could explain?
Yeah. See, in the chemical plant, sometimes, some of the products we are selecting, which is on the chemistry base in the chlorotoluene, where we are creating a R&D center also, and where our focus in the future, we would like to do more value addition in the different chemistry. Yeah. Those are based on the chemistry. Some of the products which we are selecting, it is technology is easily available, but they are more challenging on the engineering side. So yeah, but we are firm that we would like to grow in a both kind of thing, where technology is easily available from the other part of the world. We would also like to grow in that line also, as well as the chemistry which is not, or the technology which is not available. For that we would like to create our R&D center. So both the focus are there, because country like India, there are many chemicals where some of the chemistry or some of the technology which was not feasible in the past, we believe that in the coming times at least one sizable plant will be feasible in India. So where the technology is already available and it is already developed, we don't want to focus our R&D to develop something in that line. We just need to install the plant and start supplying to the customers, and it is based on the domestic supply.
And just to add what just Maulik said, when we select any product down the line, we select a product which itself has a growth potential in the range of 10 to 15%. So the market itself will grow even if someone enters. That is one thing. Second thing, considering the way, like earlier Maulik said, the way the demand in India is growing, any new capacities coming in that particular field also will be easily get absorbed.
Got it. And, this 38% of our sales is downstream today. It would be helpful to know what is the mix by product, because, each product has its own demand, supply dynamics. It would be easier for us to just analyze your business better if you can give the downstream by product as well.
So 38, as you would know, consists of the chloromethane, hydrogen peroxide, ECH, CPVC. We are actually not sharing number to number, product to product kind of a turnover. So it would be difficult to give you that number as of now.
But this number will increase on quarter basis, because now the ECH and CPVC will contribute more in that number, and other plants are all stabilized. So you will see the quarter the growth will happen in the downstream and value-added chemicals. Yeah.
Okay, so CPVC and ECH will drive our volume growth in 2024, is what you're saying.
And in 2025 also, because we are expanding CPVC, that will be commissioned by Q4. So in 25 also CPVC volume, as well as the new chlorotoluene, which will take little longer time for the approval. But yeah, in the FY25 also CPVC will drive the volume.
Okay, great. I'll join back in the queue. Thank you.
Thank you.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Hi. Thanks for the opportunity. Can you just talk a bit about, chlorotoluene and CPVC, just in terms of how big is the market today in India, and secondly, how do we see our revenue share in that?
So CPVC, the Indian market is almost around 225 KTPA, which is 225,000 tons per annum, and which is growing almost at double digit. Looking at the India's infrastructure, and the residential market is growing in every tier 2 and tier 1 city. So this is the market of India, and Indian manufacturing capacity is only 40 KTPA right now. So that we are expanding to 75 KTPA, 75,000 metric ton, looking at the growth in India in the domestic infrastructure market. And another is, you said chlorotoluene. Chlorotoluene is mainly for the specialty, and it is a specialty kind of thing where we are focusing on the various chemistry, and there our customer will be the specialty chemical company like all custom manufacturing companies who are doing custom manufacturing for the multinational agrochemicals or the pharmaceutical companies. They are going to be our customers, which they are depend completely right now on Chinese. They import raw material and they are doing value addition. So this is first time in India plant, and we are planning 50% domestic market, all this specialty company, and 50% will be the export market where all the multinationals, they already have a one of multi-purpose plant in Europe or in US.
Got it. And just to follow up on CPVC, right? It's obviously highly competitive from an import standpoint as well. So, versus imports from China, etc., will our pricing be lower, or how will we compete with the import market?
Yeah, see, we keep a fair price. Normally, it is driven by the product quality also. It is not only the price driven, because in this CPVC segment, there are A, B, C kind of customers where some people, they are very highly quality sensitive and they care about their quality and their brand. So in there, we don't find any major competition, but in the C category where we are selling, we find little competition from the import, and there we are doing a pricing accordingly, But yeah, as you rightly said, the volume of Indian manufacturers are growing. So they, for the consistent manufacturing, consistent supply, because, we are just a small part of manufacturing capacity right now in India. So definitely it supports their to bring their efficiency in terms of the manufacturing efficiency, because local supply, they don't need to keep a long planning. Once they place an order, it will reach within 24 hours to their warehouse, and they can start using it. So there are a lot of advantages, so they are always giving us a priority. So the bigger customer always they are thinking that the local support will be always beneficial for them to run their plant efficiently, and that kind of advantage we are getting it right now.
And you think from a margin perspective, you can get what kind of margin in CPVC? What is your target margins?
So again, in terms of EBITDA margin, we believe that the range should be between the 25 to 28% or longer. We don't give product-to-product margin, but whenever we select any product, our margin revolves around 25 to 28% and ROC of around 25 or above that.
Okay, got it. Second question was on, the high-cost inventory that you mentioned. So, how much high-cost inventory you still have versus and how many more quarters do you think there will be some pressure because of pricing or inventory?
So that is done. I think I would say in last 2 quarters, most of the chemical company has taken a hit in terms of the inventory loss. Now, the inventory loss, if there may be a minor thing, but not the major thing, what was in the quarter 4 or quarter 1 quarter 1 this year. So now onwards, I think it is going to be very minor change, but we see that now the things are moving upward also, in last 1 month, because of I think the global situation, as well as Chinese domestic demand has also picked up to revive their economy. Government has also taken some steps in China, and that also will push the infrastructure in China, and that demand in local has also picked up in China. So we see everything is now, I think, bottom out last quarter, And this month onwards, we are seeing, not this month, but July onwards, we are seeing couple of raw materials started going upward. I don't think so any inventory loss will be there from quarter 2 onwards in the majority of the company. Minor will be there, but it won't be major thing.
Right. So, just from a margin perspective, how do you see, say, the rest of the year? Do you think that from next quarter onwards, you will start touching the 25% margin, and then towards the end of the year, maybe even hit 28, based on the visibility you have?
See, again, considering the current situation, as Maulik said, the things would improve. I mean, things have started looking to improve. But again, the benefit of that might come in the Q3 onwards. So year as a whole, we believe that we might be in the range of around 25 or 26% kind of a thing. But again, it's too early. Maybe in the second half, we would be able to see if the second half improves, then things can be on the better side also.
Okay. And, in your revenue mix, you say around 38% is your derivatives side. Or what would be the share on profitability? Is that similar? Would be higher, lower?
Again, see, considering this quarter, the profitability from the derivatives would be a bit higher compared to chlor-alkali because of the current situation that everyone knows. And again, that's where our diversification is playing a role in terms of bringing a consistency, which will further improve down the line as the percentage of revenue from the derivatives and specialty will go up.
Okay. But I was just trying to understand from a profitability perspective, is derivatives higher margin versus, or is it very similar margin?
Yeah, see, margin, we are expecting, even we are enjoying the chlor-alkali also the good profit margin, but this will give a more sustainable and consistent margin. So the derivative will always support in terms of the consistency and the longer term,
Yeah, see, the thing is, whenever, in chlor-alkali also, it's not that the margins are lower. Whenever in the normal situation, margins are even good over there in the range of 25 to 28%, as we communicated earlier. So in current situation, if you ask me Q1, then derivatives would have performed. But again, that is going to be scenario, and that's where the diversification is helping, because we know that one particular quarter or one particular year, one particular product or industry might not perform. So my other levers will pull out. So that's where we are trying to diversify in terms of our business revenue.
Okay. And just one last question on the debt side, right? For this year, are there any, on the long-term debt or something, is there any maturities that we have which we need to repay or refinance? And, how do you see that path? If you can just give some clarity, because like someone else also asked, the debt is high which is, a bit concerning.
Our debt is normally right now, even in the quarter 1 also, it is, debt to EBITDA ratio is almost 1.5. So we believe that we are consistently doing a capex to increase the volume, because there is opportunity in the new chemistry also in India, and we are continuously investing. So it will remain less than 2. That is our goal. We will not try to keep more than 2 into debt to EBITDA at least.
For your information, the repayment, what you are asking is about 240 crore for this financial year FY24.
Yeah.
And the plan would be to not repay but refinance it, right?
Oh, no.
It will be repaid. There would be a new debt for the expansion that might come. Therefore, the overall debt level may be around the 900 level and still be under 2. So there will be a repayment, plus the expansion also has got a certain amount of debt that we will avail. So that actually almost like squares it off. So that debt level therefore would remain around the same, but slightly below than what it's been the previous year.
So overall, our volume will increase in the epichlorohydrin and the CPVC business. So the absolute term, the debt may not go down substantially, but eventually in terms of ratio, it will go down.
Right. And the new plants that you have, sorry, this is the last question, but new plants that you have, you said, can you just again reconfirm when do you expect to see the revenues flowing on both chlorotoluene and CPVC?
So chlorotoluene, definitely it will be start revenue from the FY25 onwards, slowly and gradually. And CPVC, as we have already experienced, we have already networked, and that will start as soon as we start the production, it will start reflecting in the balance sheet. So this will be also from the beginning of quarter 4.
Okay, got it. Thank you so much. And all the best. Thank you.
Thank you.
Thank you. The next question is from the line of Sriram R, an individual investor. Please go ahead.
Yeah, thank you for the opportunity. I have two questions. One is, what is the contribution of non-chloralkali segment to the bottom line? My second question is, it's a basic question. Why do you think customers will not backward integrate? Like I'm talking about chlorotoluene or ECH or CPVC. If if you can go product wise and explain, that would be helpful.
See, in terms of the bottom line, in terms of the chloralkali derivatives, again, as I said, we are not giving breakup in the bottom line for chloralkali derivatives. That is the first thing. Second thing, in terms of, currently the market, the way it is going, like for CPVC, we have a manufacturing capacity of 30, which we are going to expand to 75. And there are other players who are going to expand, but considering even after that, India is going to be a net importer. Similarly, in all the other chemicals, the way the Indian demand is growing and the way people are looking for the quality products, there is a scope for all the chemicals, as India is net importer of almost all the chemicals. And that's where we see that even if the new players come, there is going to be space and that supply will eventually get absorbed by the demand.
So another second question, just wanted to know, you are asking about each and every backward integration of each and every...
No. For instance, you mentioned that your spectrum players will be your customers for the chlorotoluene. So I'm just wondering why the pipe manufacturers or the customers who are consuming epoxy resins cannot backward integrate. That's my question.
Yeah. So see, definitely that is the possible, at least every chemical company cannot set up a refinery even though they use a refinery product, So everyone expertise is different, everyone focus is different. Some people, they wanted to, like just giving you epoxy resin, they wanted to focus on the epoxy resin, they don't want to focus on the epichloride. If you see the study of global epoxy resin manufacturing company in the world, like Huntsman or like in US, Kukdo in Korea or in Japan. So not everybody is backward integrated, So some companies, they become so big, over capacity, and so big means in the global scale plant, then they think of just to reduce their risk, they set up a small manufacturing plant of epichlorohydrin as a backward integration. But normally, majority of the player is not 100% backward integrated,
No, actually, my question comes from the fact that, there is a wide demand-supply mismatch, right? So the capacity in India versus the demand in India. So that is why I'm wondering why the large players, let's take CPVC for instance, why do you think large players will not set up, backward integrate and set up their own CPVC facility?
See, CPVC, the product is a chemical driven company, chemical manufacturing company. They need to handle the chlorine, which is coming out from the our backward integration plant. So everybody, they don't have this expertise who can do buying a chlorine from the market and setting up a plant. It is always a tedious rather than, if you have your own backward integration. Second thing, the people who consume, they are B2C and brand focused and B2C kind of companies where they invest, their focus is not on the backward integration. Even though the PVC pipe manufacturers, none of the PVC pipe except Finolex has a backward integration, Everybody else, they buy PVC from the market only. The same thing will happen in the CPVC. The people who are focused on the B2C distribution and they wanted to focus, they expand their market share and the brand image, they don't want to focus on the backward integration where they don't have enough skill so far. So it's a different concept, different mindset. It is not that they cannot do. Of course, they can do if they have a focus, they can do it. But normally people who are on the brand side, who are on the B2C side, they wanted to expand always on the B2C side and they wanted to procure the raw material from the third party. Like all the PVC pipe manufacturers are doing it.
Okay, that answers my question. Thank you so much. All the best.
Thank you. The next question is from the line of Rajesh, an individual investor. Please go ahead.
Hi, thanks for giving me an opportunity. I just wanted to ask, to one of the callers, you said that, the last 2 years, the realizations were on the higher side, and this year the realizations have come to the normal range. So, and also we are talking about, there is a lot of competition that's also expanding. So going forward, will the realizations remain the same? If they remain the same, then are we going to play only the volumes game? So how does that really work in terms of that 5,000 crore guidance that we have been talking about? Other than volumes, how does it really work?
So, yes, you are right. Like the situation which we are facing right now, last 2 years was fantastic for all the chemical manufacturer, and because of that, most of the chemical companies, they have expanded. And right now the market is slow. So, there is a overcapacity right now. But looking at the Indian market, we believe that it will be absorbed sooner or later, like what happened in 2010 in chloroalkali, what happened in 2014 in chloroalkali. When the couple of plants, they expand together, definitely it will take time. Looking at the current situation in India,
we seem to have lost the audio from the management's line. Please stay connected while we try to regain the audio. Ladies and gentlemen, thank you for patiently holding. We have the line from the management reconnected. Over to you, sir. Yes, sir, please proceed.
You were answering something. No?
So whatever the capacity, it is coming over capacity. At the same time, people are expanding in India. But eventually, if you see the 6 months or 9 months time, eventually it is absorbed in India. So we don't see this is going to be a long-term scenario. In any chemical, if you see, eventually it absorbs in India. So we find it, we are in a different kind of region right now in India compared to apart from the Europe and US, where whatever you are manufacturing, everything will be absorbed. Yeah, it takes sometimes 6 months time or sometimes 9 months time, depend on the situation and that point of time, the economic situation of the world. But eventually everything will be absorbed. That's what we believe.
So are you saying that at some stage the realizations will go up again?
Of course, yeah. It is not. See, Q1 is going to be I think the worst quarter since we have started manufacturing. So it is not going to remain same forever.
This looks as a bottom kind of a situation, and as the demand is also kind of slowdown that we are witnessing in the global market and also in India, once that revives, things will be better from here what it is right now, both in terms of volume and also in terms of value.
Okay.
Thank you. The next question is from the line of Bobby Jairam from Falcon Investments. Please go ahead.
Would you be able to share the break-even cost for caustic soda for the industry?
Break-even for the caustic soda?
Yeah.
For the industry as a number, it's difficult to put because again that depends how fully integrated you are, because as you know, manufacturing caustic soda, chlorine is a bottleneck. So, I won't be able to put a number, but generally on a normal situation, the EBITDA margin that one can make on the caustic soda will be around 25 to 28%.
No, but that would depend on the price, right? What I'm trying to get at is that in 2011, caustic prices dipped to 11,000 rupees.
Right.
So were people actually making money? So there must be a break-even cost for every commodity, assuming you have the chlorine.
Yeah, I got your point, but it depends on how is your power source, how is you are backward integrated in the power plant or not. So there are multiple.
Yeah, I assume that. No, assuming that you have coal. Assuming your current situation, what would be your break-even amount? When would you start losing money in caustic? What ECU should that go to?
With regard to break-even for costing, as of in today's scenario, we think that maybe around 24,000-25,000 per ton may be the right price.
So if it dips below 24,000, you'll actually lose money in selling caustic.
Yeah.
Okay. So that's
the energy price and the realization prices keep changing. It is not the constant thing.
See, it can be impact in the one quarter because we would be sitting on the inventory of which we bought last quarter. So that would be the only lag. Otherwise, not in this situation also like Q1, what we are witnessing, the margin would not be 25, 28. It will be lesser than that. But we don't see how it will be because generally the demand also matches in line with that, and no one would make a loss to sell the caustic soda in the market.
So you made profits this quarter in caustic. I know you're not giving the exact numbers, but perhaps you can share this.
Yeah,
yes.
Profits,
yes,
of course.
Yes.
Yes, okay. So it's not as bad as that the whole industry is facing losses or something.
All
right, thank you very much. Yeah.
See, anyone might be doing that, but as far as MFL is concerned, the kind of an input cost that they have and the infrastructure they already have built and integrated, they'll be the last one to be losing. Even if everybody else loses, they'll be the last to lose. So we don't see that situation happening at all, anytime sooner or later.
Okay, understand. Thank you.
Thank you.
Thank you. The next question is from the line of Naisar Parekh from Native Capital. Please go ahead.
Yeah, thanks for the follow-up. My question is on the comments that you made.
Sorry, sir, we are unable to hear you. Can you speak a bit louder?
Yeah, sorry, this is better.
Thank you.
Yeah, sorry. My question is the follow-up to one of the things that you said about realizations going up again. My question is that given the margins that you and the industry are making and the competition is increasing, why do you think it's possible? Like, why would any end player let you make a 25% margin, especially when the industry is growing and capacity is growing?
I didn't get your question. Can you repeat that? Can you repeat your question? I didn't get your question.
Yeah, sorry. So my question was that given the increase in capacities that are there in the industry, why do you expect that the realization will still go up? Especially, it's not like you're making bad margins. At this level also, you seem to be making 15% plus margins. So why do you think realizations will go up from here on?
No, we would not say it will go up, but I would say that the capacity which is coming up right now in the market, it will absorb. When the capacity is little over in the market and which will absorb, so automatically it affects on the realization. It also started going up. So it's a natural phenomena.
See, again, if we look for the one particular product, if we look at depends on product to product, in chlor-alkali, currently the prices are impacted because there is new capacities have come up. That is one thing. Second thing, the demand is also impacted. Now, new capacities are going to stay, but the demand is going to revive. And when that happens, the price will move up. Again, we don't say that it will move to what it was last year. But again, the current prices which are there, that is also not something which might be lasting for a longer period of time. So that's where we say it might move up from here a bit.
And what are the key pockets where you see this near-term demand revival?
So, in the western part of India is mainly driven by all the chemical companies like a pharmaceutical or the agrochemical companies or the specialty chemical companies and the textile. So I would say all the segment in the export is now running very low. Looking at the festive season in India started picking up, we believe that it will start moving in the textile. Already we see some positive sign in this month. And in the looking at the export destocking, probably we expect that it will start probably by September. It will start, supplying because people will the inventory which was there pile up, long-term back, in this financial year, which will be, they will be adding more stock probably after September. So that was the scenario which we are seeing right now, and because of that, all plants will started running there. Slowly and gradually will started running their plant around 60% to 70 and 80 eventually. So we hope that in the second half of this financial year will be better compared to the first half.
Okay, got it. Okay, thank you so much. Thank you.
Thank you.
Thank you. The next question is from the line of Praveen Sharma, an individual investor. Please go ahead.
Yeah, hi. Good afternoon. Good evening, sir. My question is, what were the chlorine prices in the last quarter, and how much of the chlorine we are using in-house, means backward integrated?
So chlorine consumption in-house is around 65%. And as we are going to add in terms of the additional capacity of CPVC and the chlorotoluene down the line, it might reach around 75% in 1.5 years time, and eventually we target to reach 85% chlorine consumption in-house. That includes the pipeline customers. And I guess on the price, Sanjay sir, if you can.
So there is a range of 3.5 to 4 rupees negative as well.
Negative. Okay. And sir, next question is, typically, say somebody is taking 100% grid power. How much is the percentage, in terms of percentage? How much is the production cost due to power for caustic soda? Means how much does power contributes to caustic soda production? Typically, on a generic basis.
So normally, in the currency, when it's a good time like last couple of years, you can survive without power plant also, because that was a one-thing kind of situation. But in the current times, I would say, I don't think so anybody would like to run their caustic plant without captive power plant or grid. I think it is next to impossible to run their plant.
Okay. No, my question was in terms of production cost, means the raw material. One is the salt water, like brine, industrial salt. The second is power. These are the two main ingredients to produce caustic soda, correct?
Yeah. So normally it is very depends on the energy price, but normally it is between 50 to 60%. Yeah. Okay.
And somebody goes on green, means he can save 20% of that, 25 to 30% of that.
No. See, green continuously 100% is not possible. So some portion of the green energy you can convert to the caustic manufacturing, but not 100%. So maximum people can go up to 30-40%, but not more than that.
Okay, so maybe 1/3 of the 40% is what is the saving.
Yeah.
Okay. Okay. And sir, my last question is more generic on the chemical industry. We have been hearing about this destocking for 1 year almost now. Our dyes, pigment, and all other industries have been suffering, and we have been hearing in different concalls. So, is this issue of destocking, or is the issue of the end consumer demand?
See, I would say it is both. Both it was there, but destocking eventually it will go. It will be again. They will start buying it. So that what we see that after in the second half of this year, everyone will be. We see that now the stock is going away right now. From all the stocks, and they have started discussing with the manufacturers also, and this will eventually. It is going to restart. Yeah, because of the COVID situation and the China's COVID situation, because of the supply chain issues, European and the American companies have planned, big in terms of the overstocking. And that definitely it takes little longer time this time. You are hearing that is right, destocking. But I think almost we are on the end of that part. I think probably in the beginning of second half this year, you will not hear the same story again and again. But yeah, some portion of the demand as well as some portion of the stocking, both are affecting in last 1 year.
Okay. Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
In conclusion, I would like to convey that long-term story of India remains intact and current situation is short-term. Hence, looking at the Indian consumption story, we are positive about long-term outlook and we are working towards that. Our future expansion and diversification in terms of multi-product catering various industries, we are targeting consistent growth both at top line and bottom line. I would like to thank you all for joining us here today. Please feel free to reach our IR if there are any unanswered questions. Thank you everyone for your participation.
Thank you, members of the management team. Ladies and gentlemen, on behalf of Emkay Global Financial Services, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.